Hey, you're a financial firefighter here today, Marco Shiro. Today's topic, what I'm going to talk about is something that maybe like 2 years ago I had no idea about. But today I'm going to talk about the whole lending process or the lending world out there. But let me remind you, I do work for the Honolulu Fire Department. I do work for REMAX Honolulu. All the ideas, topics discussed on this channel are of my own. I'm not a financial planner. I'm just here to help you hopefully get started in your journey for out-of-state real estate investing. So please subscribe, like, comment, and let me know how I'm doing. So I also have some new lighting on my phone and some camera wear. So we'll see how this goes. We're just testing out some things, and let me know, comment below, let me know how things look and how things sound. But all right, so here we go. I want to talk about the whole lending part of real estate. When I first started this journey, I had no idea about this whole lending side. When I purchased my condo, my personal residence, I just thought, you walk into the bank, the credit union, and say, hey, what's your rates? And you go from there. So how I went down this rabbit hole was, like I said, my first purchase, I purchased all cash, and then I refinanced out, and I had some properties in my personal name, my rental properties. And a lot of people that live in Hawaii, if you own a personal residence out here or a primary residence, your debt to income is already probably on the higher side because of the property values out here. So as I got a few properties out of state in my name, I started realizing like, man, my debt to income ratio is getting to a point where lenders are not going to lend to me. So I kept trying to figure out like, how do these people on YouTube and Bigger Pockets and other blogs and channels, how do they get to 20, 30, 40 rental properties when I'm here at 2 and I'm like already wondering about my debt to income? So of course I started doing some research, started looking on the internet, following different channels, and you'll be amazed at all the different type of lending products that are available to you out there. So I'm not going to talk too much about your traditional mortgage financing. I want to talk more about the investment products or lenders that are out there. So the lenders that are out there, there's a lot of investor type lenders out on the market. And you just got to do your research. And like I said, a lot of this business is about networking and building relationships. So you can reach out to me. I'll let you know what lenders I've been using, who I like to work with. But yeah, find somebody who invests and pick their brain on what lenders that they like to use. So as I started doing research, I started realizing that, man, there's all these other products that are out there. So the biggest thing, or I guess the easiest way to explain it is there is a lending product or lenders that are based off of the asset. So they lend to you based off of the property, not so much off of income state or your income statement, W-2. It is basically an asset-based loan. It's also called a DSCR, so it's a debt service coverage ratio. So basically kind of what that means is it might vary from lender to lender, especially now that the market's shifting, things are possibly tightening up. But a lot of times it will be like maybe 1.5 is the ratio. So whatever your mortgage and insurance payment's going to be, the rent, the expected rent has to be 1.5 of that amount. So for example, if your payment was going to be $1,000, the rent should be $1,500. So that's what's based on the debt service coverage ratio, and that's how the lenders would qualify you for the loan. Of course, your credit score matters, and basically you also have to have proof of funds a lot of times. So you got to make sure that the lender wants to see that you have the funds for the down payment, and typically they will also want to see a certain amount of month reserves in the bank accounts. But basically, your credit score will determine possibly how great of a rate you might get or how bad of a rate you might get. But your credit score is important for the rate number. But as far as qualifying, you don't need a W-2, you don't need, tax returns. It's basically based off of the asset. So that's also another benefit because the lender is also going to do his research on the property. So they do research a lot of times on crime rate, population. They look at the area that you're trying to invest in. So there's a lot of times that it's also that your insurance policy that you're purchasing a property that is in a decent area. So for example, one of the properties that I was trying to purchase, the lender, I had to put a greater down payment to get that property because I guess the crime rate in that area was slightly higher than their baseline. So, after talking it over with my realtor and property manager, they didn't have any concerns with it. They said, that area is actually, it's a really good area. It's a popular area. It's just, it's located by some bars. So that, I guess, might have affected the crime rate somewhat in that area. But property manager, realtor signed off on that. This is a good property. This is a good deal. You should try and move forward on it if you can. So sometimes, the lender might come back to you and say, this property doesn't meet for these particular reasons. So you may have to put a greater down payment down, or, you may not even be able to move forward on that transaction. So like I said, that's another benefit of doing some of these type of lending because the lender, basically, he's kind of providing you with a little more reassurance that you're also getting a good property. So, like I mentioned in one of my previous videos, networking and building relationships is super, super important in this business. And same thing, finding a lender. A lot of times, you're going to come across multiple lenders that have very similar products. Now, for me, it's about who I feel the most comfortable with, who I can build a good relationship with. So I primarily used one lender for all of my 14 rental properties. And it at some point, it basically makes the process a lot easier. The lender knows my capabilities. The lender knows what type of resources I have, what type of team I've built, what type of funds I have. So a lot of times, the lender was just saying, you qualify for this much. Go make your offers, bring them back to me. So, once I was kind of vetted through him, he was just saying, hey, I'll give you this letter. You qualify for this much. As long as the purchase price is not going to be above this amount, you're good to go. And then just bring the property and, they'll start the underwriting and do the, check-in of the property. But building a relationship is super, super important. And, for me, my rate might be slightly higher than another lender out there. But for me, it's the relationship. Like, I can call my lender at any time and be like, hey, I got this deal coming up. I'm interested in this. Hey, can you get me this pre-approved or something? And he'll be, oh yeah, here you go. And he'll email me something. So like I said, in this business, it's super, super important to start building a relationship and networking. But at the same time, it's also good to have, a couple of lenders that you keep in your Rolodex, because it's good to have competition, but it's also sometimes they do have slightly different criteria, slightly different products. So sometimes you might need a certain product that might fit a specific need, but that's why it's good to always be in contact with other people and just reach out to people. These people are always looking to talk, and especially now with the market being the way it is, they're probably looking for networking opportunities or reaching out to other clients. So that's my number one thing is whether it's lending, whether it's property management, whether it's finding deals. Like I said, networking and building relationships is super, super important. So, however, there is one thing I did forget to kind of mention is that, these type of loans, typically, you're going to have slightly higher interest rates than your traditional lending process. But these loans are way easier. less paperwork to deal with. Like I said, basically it's off of your credit score. It's off of your, off of the assets, so it's an asset-based loan. So yeah, way less paperwork, transaction goes a lot smoother. However, slightly higher interest rate you're gonna get. So like I said, please subscribe, like, comment, let me know. Yeah, comment below and I can let you know what lenders that I use, who I like. But yes, please trust the process, and until my next video, keep looking for those deals.